Australian markets could see 3 crypto-based exchange-traded funds, or ETFs, in the near future. The offerings from 21 Shares AG, which is partnering ETFs, Securities, and Cosmos Asset Management, gives Australians exposure to digital assets without having to buy crypto directly. How would this move the markets? Let's find out from Damian Loh, CEO of Matrix Asset Management. Great to have you with us, Damian.
Thank you for having me, Justin.
Now, Damian, Aussies are going to be spoiled for choice with multiple crypto ETFs on offer shortly. What kind of demand do you anticipate? What are you going to be watching for?
So I think that the demand will be quite large. Looking historically at like ETFs that were listed in different jurisdictions, it's always had like a great demand, and you can definitely see that there is an interest for crypto. Some people are hesitant in terms of like maybe not having the right technological expertise to be able to invest in it firsthand. So the ETF is kind of a way for them to really get exposure without having to deal with all the technical issues overall. So I definitely think, looking at how ETFs were listed in Canada and the US before, that there'll be a great demand for it overall.
ETFs are a great way for people to take passive investment bets, and in case of crypto ETFs, it gives those who are yet to get familiar with crypto or fully understand the risks of this asset class a chance to diversify. Could the ETF route become a key factor in mass adoption?
I think so, and it really depends on whether the ETF spot version really takes adoption overall. What we've seen is that some of the ETFs are based on like futures, where the underlying is actually them buying futures rather than the coin itself. Others have a really high management fee, and others are actually buying other ETFs or other funds that invest in Bitcoin itself. So I think if it becomes the version where it's only the underlying is that they're actually buying the coin itself, then I think the adoption will be a lot higher, and it will be a lot faster as well overall.
The way the ETFs are structured is also really interesting. ETF's 21 Shares offering will hold Bitcoin and Ether in cold storage. Cosmos will be investing its funds in a Toronto-listed Bitcoin ETF. What would be the difference in the two strategies?
I think it's basically people trying to figure out what the market specifically wants. And I think for the former, if they are really targeting the audience that are looking more for safety and maybe a little bit of diversification and not only having Bitcoin itself, as you mentioned, Ethereum is also offered there. And the second one, I think, is a tried and tested way. It might be a little bit more expensive because it's not really buying the coin itself, and everybody along the way has to be paid on that. So that's something to consider, and something I'm sure the investors will consider as well. Having said that, I think they've done that, for the purposes of speed. They really want to get it to the market before somebody else beats them, and it really is a testament of the regulators, being a little bit slower, but the private market really wanting to, having sensed the demand and really want to get a product out there for people to invest in as soon as possible.
Certainly a topic we will be keeping our eye on. Great chatting with you, Damian.
Thank you, Justin.